Hopefully it's not a day. So there is, I'm going to try to just lead with two things. I'm going to try to provoke some discussion rather than agreement. A good friend of mine said when you moderate panels, you should have a rule. You should have a bottle of vodka and a rule that everyone that says I agree with another panelist has to take a shot. I don't have a bottle of vodka, but I'm going to try to go on that. And this is a vast topic, asset management and the crypto world and blockchain. And so I'm going to try to narrow it down without, reducing your freedom too much to really talk about the impact of these new technologies on the business of asset management, as opposed to spending a lot of time talking about managing crypto assets, because I think that's something that the audience is probably, we're going to speak a lot about a lot here anyways, and probably more knowledgeable. So I thought it'd be interesting to really, dive into that. So I'm going to lead off, and anyone, we don't have to take it in order, but lead off with sort of a proposition that the business of asset management is to be a middleman between people's wealth and the assets that they might want to put that wealth in. The ethos of crypto and blockchain is to decentralize and eliminate middlemen. So blockchain, crypto, and asset management, discuss. How does the business of asset management, the business models of asset management, how will they be affected going forward 5 years, 10 years, if we're in the future looking back? How is the business of asset management going to change?
So I guess first I just want to thank Mona and Melonport for this fantastic Packed House event. Really well done, guys. But you're right in that the business of asset management is about to change profoundly. And it's not that institutional investors don't have a space in this new decentralized world. It's just that institutional managers have to now, going forward, really genuinely add significant value to their investments. And at this point in the current climate, just capital is not the scarce resource. And so for venture capitalists and other institutions to survive and thrive, they're going to have to do much more than they've been required to in the past.
So are you suggesting that not every asset manager in the world does an amazing job for their clients in shepherding their capital and adds enormous amounts of value?
Well, mostly on actually the project side or investment side. What we see in early stage investing, which is where I spend a lot of my time supporting projects, is that the great sort of myth of venture capital is that they would not only provide money, but they would provide all kinds of help and resources and what have you. And for the most part, that falls short in execution. And this time around, I think there's a greater sense of responsibility to actually deliver on that value add as an institution.
Yeah, I think that's true. Although I would argue venture capital is like sort of a rounding error in the context of asset management. Anybody else have any thoughts on the future? Like, how do these technologies Andrew was talking about change the industry? How does the industry look different in 10 years' time?
So I guess kind of my key thought on this is that any institution that is just providing trust and intermediation will become commoditized, because essentially that's what this software does. It provides trust, it provides intermediation. People will still need financial services. You're still going to need lending. You're still going to need financial advice. You're still going to need that type of expertise. And you're still going to have incumbent relationships. So the 30-year-olds, the 40-year-olds, the 50-year-olds will probably still use their bank accounts. But the 10-year-olds will be using their phones as their bank account. And that's going to be without that intermediary. But those 10-year-olds are still going to need student loans. They're still going to need car loans. They're still going to need expertise on where to allocate their resources. And I think that we're just essentially cutting the stack of commoditized trust off. And then people that want to remain in this business are essentially going to have to go hire and provide that type of service.
So it's really, then it becomes uniquely about the expertise and actually deploying those assets. So for instance, maybe to you, Joy, I don't know enough about tokens to invest intelligently in it. same as I don't know enough about biotechnology. If I think I need that, I actually want a middleman. I want someone that, knows what they're talking about to deploy my assets in that asset class. And I might even want a private banker above that to say you should have some tokens and biotech and whatever else it might be.
Yeah, it's similar to how in regular finance you basically have two options. You can go with an index fund, which is very low fees, or you can go with an asset manager. If you're paying the manager, you want them to be very good and actually know what they're doing, because most managers lose to the market. But for instance, in the equities world, I'd have no problem paying Jim Simons $5.50 because he's the best hedge fund manager in the world, and he doesn't even take outside capital anymore. But I think it's a similar thing here. So if you're just like adding no value, yeah, you're going to be disintermediated.
Yes.
Yeah, I would, of course, what we are witnessing now, the core developments of blockchain technology will change asset management industry profoundly. That's I'm sure about. There is, except managers, there is also asset side. So the whole concept of tokenization will totally broaden the number, the scope of assets that we have now. First of all, we have traditional assets tokenized like money or equity. Then we have protocol tokens, so a totally new category of assets. And then you have, we see the rolling out of totally new type of assets that were not available so far for asset managers. Like, for example, we have the concept of personal tokens. For example, football players that have their own tokens, their funds can interact with them, and so on. And there will be all these tokens, all these assets will be native for one.
Can I push back on that a little bit? So this is deliberately provocative, but all of those new types of assets and tokens, they could have existed previously. They don't exist because of tax and regulatory frameworks that make it impractical. There's an element of technology that would have actually been impractical to manage, the cost of actually managing the transaction flows. But putting that aside, does the token world sort of is the tsunami, the tidal wave that actually helps us maybe change some of these tax regimes and regulatory regimes, which, clearly I think there's a big debate there. They're industrial age paradigms, which makes sense. That's what they were built to serve. Or is it, is that the real driver, though, for new business of asset management? Or is the new types of assets that are enabled by this technology?
I'm Keld from Kryptonite. I think the potential of what's happening is going to force these industries to move with the times. So we've got software tokens and traditional tokens. There's going to be a sort of, these industries are going to move into a tokenization model, and someone's going to have to manage that. And I think, the opportunity for us up here is to be a lead in that. And I think it's quite telling that the people on this stage are not, from who I know, they're not asset managers. They're actually the engineers and the sort of hustlers of the world that are making this possible. And it reminds me a lot of the early internet, the people that were there at the same time. And these people drove that change. And then the sort of the incumbents have to wake up. So I think where the tokens go to will be the jurisdictions that are going to welcome them. And that's all sort of happening now every day, There's news on Gibraltar or the Isle of Man or Singapore. So the tokens will move to those places. The industries are going to be slightly upended. And when I saw the first question about what the future asset management, apart from having to look it up on Wikipedia, is that the answer was Melonport was the thing that came, because they can be the disruptor of that.
Funny that.
Yeah. So it's like kind of like they, before the synthesizer, you had to have an orchestra of instruments, and then the synthesizer came along, and you could have all sorts of instruments in one device. That changed music. So,
Satoshi, did you want to?
Satoshi from Smart Contract. Can I ask you guys one question? How many of you guys have Ethereum on your wallet? Oh, that's a lot. Okay, so before talking to the future of the asset management, I'm from Japan, and we trade much in Singapore, Hong Kong, and Japan, and I would like to discuss about the environment of Asia, because I think we have about 70 or 80 probably of the total volume of the digital assets, but when we take a look at the environment or infrastructure for our digital asset trading or exchange infrastructure, there's only one over-the-counter trading desk in Hong Kong, which they only trade, I would say, just less volume than I do, and there and there's no over-the-counter trading desk in Singapore or Taiwan or even in China, and we mostly trade with U.S. counterparties. But even though there's only few over-the-counter trading desks that can allow us to trade like 5 or 10 or 20 million worth of Bitcoin or Ethereum, and so I would say even like when we look at the like news or article in Japan, we always say like like Mitsubishi has launched their coins or government approved all these things, but there's nobody that actually I mean not nobody, but there's very few that actually understand the real situation going on. We have to build like real good exchange in the first. We have no custodian for digital assets at this moment. I think even in US there's only like maybe Gemini, but we need competitors for them to improve their service quality and everything.
I'm gonna bring us back. We're veering into managing crypto assets, and again, at the risk of everybody in this room throwing things at me, even if the total market cap of crypto assets becomes $1 trillion, it's still only a part. I think this was the message you were trying to get across in your presentation earlier, Andrew, is that this is a multi-trillion-dollar industry of managing all of the assets, physical and financial, of the world one day. And the premise is that blockchain technologies and crypto technology are going to revolutionize the way that's done. So here, I'll frame it. I was trying to think of three or four of the best asset management businesses today in the world to try, and I would say they are Vanguard, maybe Bridgewater or Two Sigma, and maybe KKR. So I'm trying to pick like different categories of the gold standard, most successful asset management firms. How do anyone, and you can pick any one or a couple, those four horsemen of the future, what do they look like? How does the next 10 years of all these technologies that all you guys are building, how does the Vanguard of the future look different than the Vanguard of today, for instance, or the KKR?
So one easy one is that all the assets that are underlining their portfolios become natively digital, and then so your trade settlement latency is reduced to essentially zero. So the trade becomes the settlement because essentially you have an atomic swap of the transactions. So T+3 will go to T+0. Another one is custodianship.
Just so I'm not sure if everyone has the same level of familiarity with asset management as they do with crypto. This is super important. I mean, all the money in this business is actually in the clearing and settlements, and stock exchanges are only excuses to run clearinghouses.
I think that you have to consider kind of custodianship 2.0, and I imagine smart contracts will be the custodians rather than kind of the Bank of New York Mellons of the world. And I think that when you kind of look from the regulatory framework, when regulators audit, they're essentially doing a 6-month look back. So if there's an audit today, it's from 6 months ago. But essentially, the regulators, I imagine, will create smart contracts and those smart contracts will have rules by which their constituents will have to comply with. And they'll essentially be a node on the environment. So you're going to have essentially real-time auditability. And I think that's going to be very important.
Want to take a stab at the next?
So we have two sayings that we often repeat around the office at Polychain, which is the near-term future will look far more sci-fi than we think, and two, the future is very difficult to predict, and so you should constantly be challenging your assumptions and predictions. And so I think it's really difficult to imagine exactly what the, say, future, AQR and leading fund managers look like in a decade. And maybe it is a decentralized, AI-based, individualized portfolio that doesn't require humans at all and is free and open source. But it certainly will look very dramatically different than any of those firms look today. I think that's sort of the only type of prediction I would try to make in that respect.
Yeah, okay. I think that's fair enough.
I would say I don't think the future, KKR or AQR, BlackRock, et cetera, I don't think it will be those firms. I think it's going to be someone totally different. If you look at the start of quant funds in the 90s, the people who started those funds were not, people who were well known on Wall Street. Jim Simons was a mathematician. The prediction company is also a bunch of mathematicians who didn't really, if they tried to join, Goldman, they would have been laughed out of the room. And so I think that the future of asset management, doesn't look like the past. So I wouldn't even compare to those companies because I don't.
No, but that was my question was exactly. I'm agreeing with you. What does it look like though? Being speculative, like who? I think your example is perfect. Like the AQRs and the Rentechs of the world, they revolutionized asset management in the last 20, 30 years.
What about
How does
prediction?
what does Pantera look like? You must have a vision
Or
of Pantera.
what about
in 10 years.
Augur? I mean,
Augur, yeah.
I mean, as the founder of Augur, how do the prediction markets help or hinder?
Yeah. So I think if you look at finance today, there's a few really large, obvious problems. One is it's very expensive to experiment with creating new financial contracts. So if you want to create a new contract to speculate on something, say it has a put option like payoff or a cash settled futures like payoff, it's going to be north of 10, 15, maybe $20 million just to get it off the ground. Whereas if you're using something like, say, Augur, you can create 1 million contracts for that cost. So it finally allows you to actually experiment with creating new financial markets. The other kind of two things that are unique going forward in asset management are, I think for the first time, finance is really going to be global. There's all this talk of globalization, but the financial markets today aren't really global. It's very rare that when you're trading, say, Apple, that the person in the other trade is someone in China or Russia, basically due to capital controls. I think that's going to change drastically over the next decade. And then I think the final piece is just the fees. There's a lot of people who add no value from the fees. Like Andrew mentioned, trade settlement times. There's a lot of people who make money off that +3 by lending the float out, things like that. And if you cut them out, I think you get a lot more efficient markets, and the investable universe expands by many, many orders of magnitude. So one example of the future of fund management could be, it's much more quantitative, and you're trading on vastly more asset classes than you are today. There's only a few thousand public equities in the U.S. markets right now, but I think once prediction markets and things like that get popular, there'll be millions of assets that you can trade on, and that changes your perspective as a fund manager quite a bit.
Agreed.
So, what are the key risks in you guys' eyes to realizing the vision that Joey just described, which I think is very compelling and very interesting, and if in a sort of a world that was just driven by technology and logic, probably highly likely or probable to evolve, but we live in a world that actually isn't governed by just technology and logic, and oftentimes is quite the opposite. And having been worked in global finance literally my whole life, I share your pain and the frustration that is manifested in this new emerging community about the nationalization, the balkanization of regulation and tax, and how that affects the pure sort of intellectual efficiency of markets. But that's the world that we live in. And ironically, or maybe they're correlated, it's getting worse and not better in the short term anyways. You've got nativist, nationalist politicians being elected in country after country. I'd be, at the risk of veering into politics and philosophy, any thoughts on how this community, I think this is really a community question, not a technology question, can help jump that energy barrier or that chasm from where we are today to a world that is, tantalizingly possible, but I think is very much at risk. from emerging due to, you know.
Well, even before you get there, I think we got to worry about key management, like people losing their public keys and private keys, and just like basic kind of nuts and bolts of if there is no intermediary, because we don't want to pay that intermediary, how do we ensure that we don't lose our keys and kind of solve that custodial framework? I think it's so logical and simple, but so important. Just basic. Recreating what the intermediary does with a good user experience.
Anyone else?
Which is Melonport's goal, but I think security of the assets is key to make that happen. There's so much hacking and sort of theft going on right now that, you know, what's forefront in our mind is to have secure custodianship of our digital assets. So we've been working with a company called Vault, which is seed funded them. And this security goes a long way to create a trusted platform to enable to move those assets around and manage them. So that's kind of forefront of mind to enable it to happen.
So previously I said about tokenization as a kind of positive phenomenon that is going to change the asset management industry, but I agree that security is key here, and also legal security is quite important, because I'm not talking about securities but legal security, because all these tokens that are appearing now on the market that are people say that they are somehow bound, connected to real world assets such as real estate. It is quite rare that these assets really represent what they are being said, what people say that they represent. And this is something that is going to be a huge problem, because we will see a lot of trades of different assets, different tokens, and at some point of time, question will emerge what these tokens really represent. Of course, some of them will be natively digital. This will be protocol tokens that have some intrinsic value, but behind some of them, there will be some unreliable legal structures that will not work in practice.
So just further to your point specifically, obviously one of the big risks that many people identify is with respect to regulation. But we've been fortunate enough to open a number of conversations with a number of regulators in different jurisdictions, as well as observe this sort of famous jurisdictional competition, as it's been coined by one of our founding investors, Fred Wilson. And for the most part, there are some examples of very heavy-handed regulation, specifically out of China, which I actually view as temporary. But for the most part, we've seen very coherent and competent regulators taking a cautioned approach to this and not wanting to stamp out this important regulation. So while it is clearly a risk and needs to be identified as such, I'm very optimistic about what we're looking at in the next steps over the next few years as regulators, kind of unfold their rulings on how to approach the space.
Yeah, I think that makes sense. I'm going to ask a question that I'm ignorant of, but if there isn't, maybe this is the founding meeting of creating it. Is there a trade association for crypto asset managers? Because if there isn't, there should be. And you guys might laugh, and I know it's like it's sort of the antithesis of the. Did they? Okay.
Yeah.
So I missed this morning, but it's very, the playing, coming back to this and to your point, Ron, about getting the being in the room with the regulators, with the politicians, is so important, because if you're not, there's a whole bunch of people, the turkeys that don't vote for Christmas, that are in those rooms and are going to make sure that the change doesn't happen. The people that are making, I can't remember if it was who made the point, that are making, multiple basis points on T+3, they're in those rooms making it damn sure that those rules don't change or don't change quickly. One of the things that doesn't get, regulation gets talked about a lot in these kind of discussions, but one thing that I've found, and maybe I'm just not following the right people, that isn't talked about as much, it's a little bit, but not as much, is tax. And actually what I've found in 30 years in financial services, that regulation is something you need to comply with, but tax actually drives behavior. I'd be very interested to, and actually, and by the way, like Al Capone knows so well, tax authorities actually often have much more teeth than regulatory authorities. So I'd be really interested in your thoughts on how you see the world today and how you see that evolving, and what this community can do to encourage more certainty in that respect.
I could foresee a world where the smart contract will instantiate real-time tax. So basically, if company X earns $1, 7% of that gets essentially shuffled out immediately, and you can have kind of a regulatory compliance with that type of regime. I'm not sure that's a happy situation, but it is what it is.
Well, yeah. Again, this sort of goes into philosophy, but we have to have, we need roads and sewers and things to be paid for. But I was having a discussion with Mona earlier about that exact point, and this is something I actually get quite excited about, because this community could all of a sudden become, you got to be careful, but become advocates with, with people trying to build government fund things and fighting, and actually could be in the public zeitgeist against fighting, tax evasion, egregious tax evasion by creating these embedded structures. Does anybody else have thoughts on how that might evolve? Is anyone doing a platform where it's allowing distributing of payments against the tax code?
So I do a lot of arbitrage trade using several exchanges and several OTC trading counterpart with using several jurisdiction entity. And I'm working with lawyer and accountants where everybody is working on to figure it out what's the right rule is. Because, crypto, take a look at the existing security. We wire the money to the one account. We always withdraw to the same account. But the digital currency, it just, withdraw and just cross borders, go out to, when I buy a Bitcoin with the Delaware entity, I can sell with on a Cayman entity or Japanese entity or Singapore entity. But, if you want to close book, if you want to do a bookkeeping, you typically have to, get all the info from exchanges and, like all the execution emails that I have done. And should we share with the U.S. regulator, and should we share with the Japanese regulator? And these kind of things, I haven't figured out yet. So what I'm trying to do is I try as much as possible to settle within an offshore entity, and in a jurisdiction where I have to pay tax, we will pay tax, but I doubt that those regulator in each different jurisdiction can grab all that info.
That just made me think of a straw poll. Maybe all of you here that hold some crypto assets of some, how many would say on a scale of 1 to 10 you're 8 or above in terms of being confident that you know what the tax consequences are in the way that you live your life, the jurisdiction that you live in?
The U.S. is pretty straightforward. They've classified it as property, so long-term, short-term property gains.
And but there also to the question of is that and that's for all crypto assets.
Yeah. So if you go Bitcoin to Ether, that's a transaction.
But there was only, what was it? Was it 2 years old? There's 800 people. Yeah.
The tax man's coming.
Yeah.
Pay your taxes.
Yes, maybe one comment here. So I think that taxes are the issue that are, of course, are important, but they are not going to kill anyone, like any project in the industry. This is something that there's a lot of uncertainty about that, but it should be cleared simply by regulators. And I think that primarily taxes are a problem for the government and not the project and asset managers here.
Yeah, what I was mentioning, and I was being a little bit cynical about it, but if you look at the world of asset management, it wasn't what the tax, is good or bad, but tax drives so many financial decisions, the tail wagging the dog. And philosophically, just so it's, I think that's oftentimes very, negative externalities for tragedy of the commons. And I liked Andrew's point, but I'm curious maybe of exploring more how a smart contract blockchain-based asset management industry can maybe fix some of that.
Well, I think what we're seeing right now, and what we're going to continue to see more in a more pronounced fashion, is this jurisdictional competition. That because this technology sort of accelerates Thomas Friedman's "the world is flat" thesis, and it's very easy to quickly move offshore if your onshore tax authorities become very draconian with respect to their rules and requirements, and projects who don't like their tax regime at home are moving offshore. This is why we see so many projects here in Zug, so many projects in Gibraltar and Liechtenstein and Cayman, because and we've gone through this analysis with literally dozens of projects, and 99% of the time the decision of where to locate a project comes down specifically to the capital gains exposure on the tokens that the foundation or corporate entity will receive after the ICO. So an ICO happens and tokens go into that corporate entity, and then they'll appreciate over time quite substantially. And the capital gains exposure on that asset base is the single deciding factor that drives most entrepreneurs here or in other fiscal paradises. And you're going to see that accelerated if your more traditional markets don't adjust their taxes to be more appropriate.
Again, but that's not unique to crypto. So Luxembourg, Ireland, Bermuda.
It's accelerated with crypto,
Okay.
right? It's just easier with crypto. You can get it done faster. It's just going to be dramatically accelerated. A corporate inversion of a crypto company can happen in a few hours. A corporate inversion of an American corporation takes a long time and is going to increasingly get more difficult.
A lot of the crypto companies are distributed teams as well, which makes that overseas incorporation decision a lot easier versus actually having to move.
Yeah, if you never want to get on a plane. So I was fortunate enough to be involved as an investor in some of the early online gaming sites, which some of them were very, very successful, but many of them operated, some operated in the red, but many operated in the gray because the legal framework didn't exist. It was similar to crypto. And there was literally people who, got arrested getting off planes because of these things were moved into jurisdictions. And a libertarian would say, that's egregious, but it's a real risk. So you can move the company, but until we're all robots, we're all real people that live somewhere. Do you think that's a risk going forward? The great thing about this community is it really does live everywhere, but that's also potentially a limiting factor. So if in this jurisdictional competition, do we get a world where everybody moves to the equivalent of Singapore for this world, or?
So that's why I said this is the problem of governments, not the project makers, because the governments are faced with that problem. And coming back to the idea whether we can use smart contracts, whether tax authorities or other government agencies could use smart contracts for solving these tax issues. Of course, it is a kind of appealing idea, a plug-in for a government to each smart contract to monitor transactions and to be able to intervene if it's needed. But there might be a simple example. Let's say that we have a DDAO, the original one, like without debug, and the one that the DDAO version 2 with a plugin from the government where tax authorities can monitor all the transactions and so on. And now the question: in which DDAO would you actually invest? And of course, I think that the answer is not obvious. And we have to remember that even though people might create solutions totally tax compliant solutions with plugin for the government, then copies will emerge without these plugins. And that they will be more economically efficient without the need of automatic tax payment and so on.
Any other thoughts on that? Or?
Well, the government could. There's a way the government could force you to pay the taxes. imagine like if imagine if the U.S. government wanted to issue digital dollars on a blockchain, and they basically made it so that you could do the same stuff as Ethereum, except everything was just automatically taxed, and they programmed it in. And you can even imagine that temporarily, the government would say it's permanent, but eventually Congress would change it. Temporarily, they'd say you can pay 10% lower taxes if you use this system instead of using, say, Bitcoin and having to report it. And for the average consumer, nobody wants to go to jail for tax evasion, so you would use the kind that's reported, or you'd pay it with Bitcoin. If you're using the Bitcoin version, your taxes are 10% higher, or slightly higher due to the way the math works. Whereas if you use the government chain, it's 10% lower. Then maybe 10 years from now, Congress is like, we're going to remove that, discount, and they just make the tax rate the same. But it would be basically a very simple, relatively straightforward way for a government to create its own blockchain. It basically kind of, well, not with guns forcing you, but in a Schelling point kind of coordination game problem, effectively getting you to use their chain instead.
This is a very nice idea, but it is always a problem with creating such incentives, because in such scenario, simply all those off-chain entities will just move on-chain just to benefit from this more for this lower tax rate, right? All the grocery store would move on-chain just to pay 10% lower tax.
That's right, and even though they're paying 10% lower, I'd bet a lot of money government revenue goes up due to no tax evasion.
Yeah, I think that makes sense. So we've got about 10 minutes left, and I'm going to ask sort of one more theme I want to explore with you guys. That sort of it veers into the unique aspects of crypto assets, and not just asset management, but starts in asset management, which is the value of liquidity. So there's been a lot said, both from within this community and outside, about liquidity being a feature of ICOs. Certainly with respect to venture capital, for instance, which seems to be at the in the short term the main sort of competing traditional asset management paradigm. I've written a little bit about this. Liquidity is not a feature; it's not a bug. It's something that is a characteristic of an asset, and it has a value and it has a price. It's very, very difficult to value and price, and there's been a lot of work done by very, very smart people on that pricing. They're sort of digital options, essentially. I'd like to get people that you guys are all deeply involved in ICOs and tokens and these new crypto assets, and they have this aspect of liquidity or not? Question mark. Discuss thoughts on the value or not of liquidity, or is it gray, more nuanced than that?
So I think we're actually releasing a lot of liquidity. There are a lot of projects around real estate that are kind of in their infancy now, but if you could imagine the 200 of us in a room owning this building like a REIT, after the building's unencumbered with the loan, we could essentially tokenize the building, and 200 of us have that token. And in the past, we really wouldn't have liquidity event unless we sold it or got that incoming rent. But now, if we tokenize this, we could actually sell our shares or our tokens on a secondary market. So if I need that liquidity, I'd be able to do that. And that's something that's new.
But why couldn't you do that with a share structure
Well,
today?
I think that you
with
could.
A REIT?
I mean, you could do it with a REIT, but I think this is becoming exponentially more efficient. I think that you're driving down the costs to do so in the management.
Yeah, for me, one of the most amazing things about this space and what attracted me to Polychain Capital was the fact that for the very first time, you can take a much better risk-adjusted approach to early-stage investing. And that really rests with the liquidity of the assets. One of the primary reasons why venture capital is sort of a walled garden closed off to retail investors is because of the problem of liquidity, that you have to make a decision which you have to basically sit with for 7 or 10 years, and retail investors should not necessarily be subject to that. But with tokens, since you can quietly take your early stage position off the table and have a liquidity moment, I think it opens it up, the possibility of this early stage investing to a more retail audience, and that's extremely compelling.
But is that a problem of technology or a problem of regulation? Because right now, I think it's regulation that, for those reasons, it's not good for, unless you, and I don't want to get into the details of whether they're written exactly right, but the idea is that if you don't, you can't invest in very illiquid assets unless it's money that you won't need. So that you know, it's not so much
it's
tokens.
it's certainly the nature of the asset, right? When you take a position in an early stage company with a safe, you know, you are tied into that company. You have no, you know, you have shares, but there's no liquidity provision typically without board approvals. So if you want out, then you've got to enter into these proxy fights and board wars and things like that. So it's more the nature of the asset, right?
Yeah, but you could write an equity contract that has none of that in it. It could be just plain vanilla common equity that doesn't have any of those sort of impeding
Sure,
restrictions.
but then you need to have an open market with an adequate liquidity pool to be able to you know, find buyers and sellers of those assets. And that really doesn't exist with the current framework, which it does with cryptographic tokens.
But do you think it still would if there was 10,000 tokens out there? I mean, every market I've ever traded is liquidity is a Pareto distribution, like a very, very steep Pareto distribution.
So just to be clear, this liquidity does exist with tokens. But the reason why, say, Second Market and Shares Post and these others have not really done very well is because there just isn't that open, liquid, you know, tradable market for these assets. It's difficult to find, you know, secondary buyers for a lot of these equity assets. And, you know, whether that's just an issue of regulation or the structure of equity itself, you know, it just hasn't flourished in the way that it is with tokens.
I don't think it's been tested with tokens yet. It's not a big enough market. I think there's going to be a long tail. My prediction would be there'll be a long tail, just like in all other assets. Equity is the same thing. Somebody mentioned pink sheets this morning. You know, there's a lot of sort of traditional securities that are not liquid, not because their instrumentation doesn't allow them to, it's because nobody cares, right? That you need two sides to every market. If there's a million tokens out there, or a billion tokens, you know, will all of them be liquid?
So
question.
Vodka for me, because I totally agree. You know, it's all about transaction costs, right? With tokens, and you know, the difference with existing solutions is that, for example, the discovery process, price discovery, or finding another your counterparty to the transaction is simply the cost of it is much lower with tokens and with blockchains, which allow peer-to-peer transactions.
Yeah. I've got two thoughts. One is that if your token can't get listed, then you've got no liquidity. So, you know, exchanges are getting harder and harder to list tokens. And
sounds like the NYSE? Sounds like NASDAQ? Same thing, right?
yeah.
NASDAQ listing, NYSE listing versus...
Will help that. But, you know, you've got no liquidity if you can't sell it to anyone on a market. So that's one thing that's, you know, a lot of these ICOs coming out are going to struggle. There might be some sort of third division exchanges where they can sell tokens on, but they're just not credible. Another thing that's really I think about a lot is the amount of fiat that goes in and never comes out, and it just gets reinvested by sort of like this crypto investment mindset. So
playing with house money.
Exactly, yeah. So that's kind of a new thing that helps projects.
So I think we're almost out of time. So maybe just to wrap up, go down the panel. I think congratulations. I don't think we did that once, the sequential panel answers. But to finish, we'll do that. The largest asset manager in the world in 15 years' time. Joe, I think you've already answered this from your point of view. Someone who exists already or someone we've never heard of. And how big are they in terms of AUM? You can denominate it in... I'd prefer if you do it in dollars, because if you do it in Bitcoin, I'll have to do the math, and we don't know what Bitcoin dollar will be in 15 years. So, you want to start? Or we'll start that and come down.
It's Satoshi.
No.
I'll vote for Satoshi. Will be the largest asset manager.
with how much AUM?
I think that the incumbents will get very smart very fast, and I think that an incumbent will remain the largest one. So you can take any of the BlackRocks of the world.
okay.
Yeah.
It's 15 years, right?
15, yeah. Sure, 15.
in
Far
15
enough to be
Yeah. In
completely
15 years, I don't
crazy.
think Bridgewater will be the largest hedge fund in the world.
Possibly something like a Numeride style AI network that's got like a hive mind that's
And-
stole
and-
your answer.
Yeah,
I would be perfectly fine if it ends
Okay,
up
but
being.
Ryan, so you can give the order of magnitude. How big might that be? Fantastically.
Numerai's side, if I was to guess at it, I would actually say that it's probably just a very easy, open-sourced, downloadable asset manager that runs on a highly advanced AI and is not owned by anybody but the person who's depositing their assets. And the order of magnitude is certainly measured in trillions, and maybe even in tens of trillions.
So I would say in 5 years' time, some of existing players, the largest ones. In 10 years' time, new entrants that will be big enough to overtake the incumbents. And in 15 years' time, no asset manager, because all will happen peer-to-peer, no middleman.
Super. And so to finish, and to thank Mona and her team for organizing this amazing event and bringing all these incredible people together, I'll say Melonport and a billion of whatever.
Melonport will be the largest. Melonport.
Thank you all. That was fantastic. Thanks so much.